Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Friday. Russell rebalancing morning. It's the annual, I believe they call it the reconstitution of the Russell. It's actually one of those more stealthy volatility days. So while, yes, we've had our eye on the Federal Reserve now for the past 2 days, and it continues to be a roller coaster of a ride. Now we have probably one of the more stealthy volatility events, and that is the rebalancing. There are a number of stocks that tend to, get a little bit of a boost. I know a lot of folks are talking about Meta, but there are a number of stocks that, as they are added or even removed, I think most folks focus on what's being added, are going to make some bit of an impact. But I want to mention something here really quick. And that is, where is oftentimes the impact? What's right now, I think if you were to look at the Russell from two perspectives, there's, of course, let's take the RTY futures off the table for a moment, right? Because most traders and many traders really should start with the IWM, right? Trade the version of the Russell that is the ETF. Clearly, there's a lot of liquidity at the option level. It's a great ETF. This is the Russell 2000, the index that's been actually doing really well. And frankly, that I'm noticing is going to have the most impact with the rebalancing is the 1000. And there is an ETF for that as well. It's the IWF. So we have IWM, that's your RTY futures, Russell futures 2000. And then there's IWF. So keep an eye on that ETF as well. I think a lot of you might find, hey, okay, I can see where the impact on the 1000 is different than the 2000, and go from there. Couple names just to throw them out there that are on my radar. GM is on my radar for this reconstitution. TripAdvisor has been on my radar. I think TRIP has been on my radar for the reconstitution, and two others. So Trip, GM. I think a lot of folks know RIVN is being added. I mean, Meta, there are some stocks that we know that are not added per se, but their weighting is going to be increased. For example, like Meta, I believe Meta is 0.6 and it's going to be up to about 3%. So going from just over 0.5% to 3%. 3% in the Russell 2000 or even in the Russell 1000 is a considerable jump in weighting. And the last one that I've got on my radar is Southwestern. There we go. Southwestern Energy. So those are, and this is a $5 stock. It's probably my least interesting one, but there are a number, I think, of them. Ring is going to be added. Oh, you know what? Here's kind of a simpler favorite. Para is a conversation that gets asked, or a very popular symbol, PARA, as well. So keep an eye on that one. Now, remember, the list is usually released mid-May, so these are not new. And when it comes to any kind of news like this, gang, always presume we're at the very bottom of the totem pole of who gets news when. I've always considered myself the mushroom, right? When it comes to the news, I'm always going to consider myself in the blind and covered with you know what. We are always going to be, as retail traders, likely the last in the echelon of news. So never presume a piece of news that we have in our possession has not already been discounted. If we function that way, we're going to be a whole lot more better off than not. Okay, so that's a quick look at what's going to be moving markets around today. I don't consider the rebalancing an event for the week per se. It could really have ramifications that predate today because we already know what the stocks are and they're already discussed and it's known. So it's already been discounted now for, this is what, June 20. So it's been discounted for roughly a month. Monday could really be where the wheels get some traction, right? Where the wheels meet the rubber meets the ground, whatever that saying is, that we could see then. All right. So next up is, and all these would be to the long side, right? If you're looking at the catalyst for this edition, it would be to the long side, right? So like GM, yeah, Joe, yeah, it would be to the long side. All right. So moving on, let's grab some questions. Let's get into our show here. And first up is Megawatt asks, can I update on the Fed? Are they doing what's expected? So far, what's expected. Now, look, are they doing what's expected, Megawatt? No clue, right? We're going to presume, right? We're going to presume that they are going to, and let me grab my, there we go. Let me grab the website that I use. Bear with me. There we go. All right. So we're going to head on over to the CME FedWatch tool. And what's expected, that's all we can actually know, right? I don't know what they're going to do, but what is expected is definitely something within our grasp if this site loads up. But as of yesterday, July is expected to be a rate hike. It's still the most probable outcome. Then September, November, August, they take off, by the way. So September, November, and sorry, my video might be hiccuping while I'm opening my browser up, which seems to be taking forever and a day. There we go. We should be good now. Okay, so if we scroll on down, or not good, but let me just tell you what it is, because this seems to be not cooperating this morning. So the idea is that we're going to get a hike in July and a hold through September, November, and possibly December. So the pivot is not necessarily factored into 2023. It's not completely ruled out either, but it's not as heavily factored into 2023 as it was even just, say, 45 days ago. Ultimately, what we have is the understanding that overall, the Federal Reserve is going to hike again, likely not twice, and we are going to pause at least until the end of the year, or possibly beginning of next. But pauses precede pivots. And remember, if we end up in a recession come the end of this year, that's going to force the Fed's hand. We're already seeing labor productivity improve. So that's going to actually allow the Fed to think about a pivot sooner rather than later. And by the way, gang, pivot is just a lingo that we use to understand that the Fed will change their mind on monetary policy, and usually in a sudden way, by going from that hawkish cycle to a brief period of pausing to boom, the rate cuts all over again. So presumably we'll be at 5.25% to 5.5%. And then from there, we'll see when that first quarter point cut comes, likely, if at all, in December, based on what we know right now. So that's what we've got there. All right. Joe W. asks, what is the consensus on what, Joe? Sorry, I don't know the context. The consensus on GM? Or you mean in terms of direction? Yeah, I'm bullish. GM's in an uptrend. I think that's what the question was. Yeah, GM's in an uptrend. So I would look at the 200 on the daily pretty closely. And I definitely treat GM as a market where buy the dip and find support and get long would work. Yeah, that's the way I would look at it. Yes. All right. Where the rubber meets the road. Thank you, Matt. I screw these things up all the time. Where the rubber meets the road. You're most welcome, Joe. All right, moving on to Walter. With Schwab purchasing TD Ameritrade, will my indicator still work on toss? That's happened a long time ago. And yes, Walter, they continue to work. I don't know that they have any plans on changing it, but that purchase happened a really long time ago. So I don't see any, I haven't heard otherwise. So we'll just continue on. The bottom line is there's always a redundancy, right? I'm always looking at redundancies. And the redundancy, or the backup, in some ways I like it better, is TradingView. I've been using TradingView for over a decade. Love their charts. They're probably the best charts, period. They're web-based. They're broker agnostic. And my complete suite of tools work on TradingView. So if ever something were to change, I don't know, but if they were, we've got the TradingView. So there is that. And I do want to use that in Charts and Coffee, and generally more often. I almost always have it running. And most anything that I can do on Thinkorswim, I can do on TradingView. There's some differences in the way that we have customized layouts, but short of that, these are amazing charts. It is primarily the charting platform that I use for Forex, ETF stocks, and it's my preference to use the TradingView platform for my alerts, which any one of you who follows my style know I'm a big fan of using alerts. I'm a big fan of giving the platform the job to babysit my trade idea. And therefore, when it says, hey, we have proximity to that level, and that's what frees us up. When people say, Rob, do I have to be glued to my computer? I say, well, when you're building the setups, that's the most intense time of work. But then once we built the setups, the most powerful thing we can do is step away and let a completely unbiased, unemotional machine say, your setup's close to triggering. And that's why I love TradingView. All right, next up. Is it time to buy TLT calls for a swing? All right. So what's the timing? Let's stick with the TradingView, shall we? So is it time to focus on that? So ultimately what I have on TradingView, all right, so what I just activated, by the way, are the daily price movement range. Daily price movement ranges are the tool that I use to find support and resistance on a 1 hour or greater time frame. So it could be 1 hour, 2 hour, 4 hour daily time frame for short-term swings. Mean reversions are not really, for me, applicable in a non-trending market, but DPMRs are. In a trending market, many of which are parabolic, again, I may not get a reversion to the mean. I may not get that pullback to the 34 EMA wave, but what I do have is the daily price movement range support levels, right? So I'm going to activate those here. And two things are coming up on the radar. I'm going to pull in all the data for 2023. And there's a gray line right here. In fact, I know there's a lot going on. I'm going to actually just clean up this chart just a bit. I don't need the wave for this setup. All right, so there you go. Point of control. I'm a big fan of anchored volume weighted average price and anchored volume profile, one of the most important levels on any chart, which is one of the few levels that it's a level that traders overlook. Very few traders look at volume-based price levels. Point of control is the volume-based price level. For those of you that read This Week in the Markets, and I've noticed I talk a lot about volume levels. And so there you go, Raphael, right there, 102. 102 is a great level. That's a volume-based level. It's a little bit in front of my DPMR, but as far as an aggressive level goes, I would not rule it out. I would not rule it out at all. I would just think about that as a more aggressive level. All right, next up is Google for a swing trade. Larry, if I'm going to put a swing on, it's going to be a 1 hour or a daily, and I would need something closer to about 120 to do it. We're pre-market 121.89, so I'm not low enough to take advantage of it. And if I were to look at volume and such, I've got a volume level. It looks overhead. Let's pull up the data for the year again. All right, where's the point of control? Okay, that's way down here for the year. What about the point of control for this quarter, right? Right, okay. What about the point of control for the quarter? Nope, it's still way down there. Okay, what about the point of control for roughly the last month? About there. Okay, so if you go back a month, our point of control, our resistance based on volume is sitting at 123.5. I would presume between the daily price movement range and that point of control sitting above, if we're going to see Google sent lower. Now remember, Google's part of this whole reconstitution with the Russell. So maybe Monday. This could be a little bit of buy the rumor, sell the news, because it's a surprise to nobody that this is going to increase in weighting in that Russell 1,000, 2,000. And therefore, maybe a little buy the rumor, sell the news, buy Google in anticipation of the addition, just putting an idea out there. Let's take advantage of a move lower, probably closer to about 120 is the way I'd look at Google. All right. Next up is, not sure if you remember, UNH daily gapping. How would I manage if the gap closes? Hey there, Walter. So, well, how would I manage if the gap closes? Walter, you know your cost basis, right? You know your risk and you know your reward. If you end up, so let's face it, all of us have gone through this cycle, right, We kind of let a trade go a little further, but we could afford to do it. We could hang on to the position. And here we are in a better spot. Walter, what I would do is if you end up back at your entry price, right? Your P&L is back to zero. It's a tie ball game, right? We're deep in the game, but it's a tie ball game. So what I would say is at that point, if you can shift into, if I were looking at this symbol for the first time, would I like my position? Right? Also keep in mind, I don't remember how many days to expiration. So if you're in a window of time decay, that supersedes everything because options are depreciating assets, right? But if you can get back, so in the vicinity of that tie ball game, and you can honestly look at your charts with sort of new eyes, fresh eyes, and say, if this was my position as of today, knowing what I know, would I be happy about it? Hang on to it as long as you have time. Figure out your target, figure out your stop, right? This time, hopefully we don't end up with a gap. So it's kind of unmanageable in that vacuum on the chart. And then play it out to your target. If you say no, Rog, knowing what I know now, having what I have, would I hang on to it? No. No harm, no foul. You're out commission, right? So that's the way I would manage it from here. Look, we've all been there, right? We've all been there. And one of the things we were talking about here in the office yesterday, and I will definitely give you a lot more insight into this going forward. Many of you have noticed in the free videos, probably 2 or 3 of them now, I've been introducing TradesViz. I've been using TradesViz a lot because at the end of the day, the thing all of us want is not a home run trade here and there or one big winner here and there. We are looking for account growth, or at least I am. And I imagine of everyone watching right now, many of you are saying, yeah, Rob, that's what I'm looking for. I'm looking to grow my account. Growing the account is not about looking at the points or percentages per trade. It's looking at the accumulation of all the trades that we've taken over the course of a week or the course of a month. Those are my favorite times to grade myself, if you will, and say, all right, am I heading in the right direction? And what types of trades are working and what sectors are outperforming and which stocks are outperforming, which time frames are outperforming, which time of day is behaving better. And those are things we can only do if we plug into something like a TradesViz. I'm not plugging TradesViz. Use whatever you'd like. Wingman Tracker, TradeView, Trader Sync. I've used most of them. I'm just using TradesViz right now because I've linked it up with Tradier. Right. So I'm using Tradier and TradesViz, and I'm going to continue to do that in July. So stay tuned because a lot of what we're going to start thinking about and talking about is how do we focus on, taking individual ideas and over the course of a month, over the course of a week, how are we positioning ourselves for that kind of account growth? That's everyone's goal, I would think, right? I'm not here to hit a home run, right? I'm here to have a career. And so I realize when I get back to any of the struggles that traders tell me, hey, Rog, I'm struggling with this. Hey, Rog, I'm struggling with that. It's all of the different formulas around account growth. It's position sizing. Walter, thank you for all your transparency and honesty. It's stop losses. It's, not getting caught up in 1 or 2 big winners here and there and grading trade by trade. It's grading week by week. It's grading the overall P&L curve. And I've been looking for a platform that I could use that's affordable. TradesViz is probably the most affordable of any of the platforms that I've used, and it's super transparent. So I think if we all start thinking in those lines, Walter, and that's your question, maybe think about it. If we think about those in those lines, I think we're going to be far better off than thinking about that one big next trade. How does this trade work into the exposure that I have in the market? What kind of risk does it present to my account, etc. I like AMD for maybe a gap close. Yeah. Green eggs and ham. Yeah. Keep an eye on that. I do like the idea of possibly a gap close. The closer we get to 108 and change, I do like that a lot. Yeah. I do like that a lot. Absolutely. All right, gang. As always, thank you so much for being a part of Charts and Coffee. I'm back to the big mugs, gang. This week, I hardly knew what day it was. Yesterday, I think we ran Charts and Coffee to almost 9:30. All right. Back in the game. We've got a big week coming up. That's end of quarter next week. It sets us up for the second half of the year. I'm very optimistic for the second half of the year. We're coming off a great trade on the Qs from Powell. Thank you, Powell, for the volatility. Upward and onward, gang. Be good to each other. I'll talk with you soon.